Because, again, when you see responses this extreme in something like the fund manager survey that are bearish, you tend to think, well, maybe the worst is behind us, and it's a contrarian positive sign.
Kelly, yeah, at a certain stage, all the negative sentiment being intensely negative becomes a bullish signal. But I think in contrast to 2009, in contrast to 9/11, I believe that the negatives that are there in the Bank of America survey have further to go before it becomes a buy signal. And the reason is that we have a total shutdown of many sectors of the economy in a way we did not have in 9/11. And in some ways, the increase in unemployment, the deterioration in GDP this time are both going to be worse than what we had after 9/11 or in the Great Recession that we had in 2008, 2009, which is why I think, yes, it can become a bullish signal at some point in time, but it is not yet the time to call that signal.
Okay, Michael Cuggino, same question to you. And again, so everybody knows the numbers we're referencing here. Bank of America Global Fund Manager Survey, cash levels are the highest since 9/11. Equity allocation is the lowest since March of 2009, and that was the market bottom last time around. What do you take from this?
To me, it's somewhat bullish because it's so negative. But I would argue that it is different this time than the other recessions that we had in the last 20 years. But also the measures we've taken are different. The quantitative easing, the Fed backstops, the fiscal stimulus are different this time. I believe the multiplier effect on the money that's getting into the economy now through the fiscal measures in conjunction with the broader Fed backstop are going to provide some support to the economy, and so that may cushion the blow. Also, I think the markets are starting to forecast what comes next after all this negative news continues to come out. And with that, it's likely we're going to have rolling recoveries. They're going to be diversified geographically by industry group, et cetera. And there is the possibility that maybe things aren't going to be as bad as everybody's forecasting because maybe we won't get to the depths that everybody is predicting. There are reasons to believe that, people are finding a way to work from home, to be distributive processing, to get things done. Companies are going to have decent earnings. Some are going to be able to issue forecasts like J&J.
Right.
Others will not. But net, maybe there is a reason for some optimism that things might not be as bad. So I believe there's a lot of risk factors. They're mostly uncertainties right now versus pure negatives, and investors need to be cautious. But I think that these signs indicate somewhat of a bottom bullish factor, contrarian indicator like they typically have.